corporate debt. This was a very important issue the last few years, and it's equally important in 2021. So much so that news services have already started to write about it, as has Murray Gunn of EWI just on January the 19th. This is where LQD comes in. This is high-grade US denominated corporate bonds, and the wave count is suggesting a very important message.
So let's start by looking at LQD on a bar chart. And as you can see here, the first thing you take away is simply a market that has been going higher and since about the summer has been going sideways. But simple trend following techniques will start with recognizing that there are indeed higher lows, which is half the bullish story, as you can see with these pink squares and large pink arrows. So now you want to keep going and you'll see higher highs with these blue squares until the December 2020 peak, where it became a lower high. So from a trend following technique, you would simply know that it was a bull market and now it is a sideways market. It doesn't really give you an indication of whether it's going to break higher or lower. It would just raise a question mark of whether it's going to continue because the higher highs have stopped. Well, this is where Elliott comes in. And if you look at the wave count that we have been running with for many quarters now, we've been counting this as 1, 2, and then 1, 2, 3 to the top side. Now within that, you may ask yourself, why isn't this 1, 2, 3, 4, 5? Because of course 4 didn't overlap with 1, which is acceptable. The problem is that this wave here is smaller than this wave and this wave. And as you may recall, wave 3 doesn't have to be the longest wave, but it cannot be the shortest wave. So instead, we've been counting this as 1, 2, 1, 2, like a core ready to go higher. Now, in terms of where will this market go next, one of the things you notice from this peak, it is corrective to the downside. These are not impulsive moves. So a trend following technique may tell you this is bullish and now sideways, but Elliott goes a little bit further and tells you it's bullish, but so far there's no indication of a major top, which seems to fit with our preferred count that this is some type of fourth wave, which suggests there is a very big top coming, but ideally after one more thrust higher. And if you break down the fourth wave, you can see it looks like it's forming a typical triangle, A, B, C, and now D and E forming. The key low is 133.55.60 because in the contracting triangle, you don't want these lows to be taken out. So Elliott gives you that perspective as well. From a momentum perspective, you can see momentum is peaking in wave 3 of 3, also traditional. So beyond the general trend following techniques, Elliott tells you where you're wrong, it tells you what to expect, and most importantly, in a very protracted trend, it tells you to have a mindset that a significant top is coming, either confirmed below here or after the thrust higher from the triangle. So Elliott helps you in the short term and anticipate potentially the long term as well.
So combining Elliott with trend following techniques allows you to understand where you're wrong, what to expect, and get you into a mindset in case there is a change in trend. And with a subject as important as corporate credit, you understand that when you follow the wave count today, you may understand the stories that will be coming tomorrow.